Good evening, everybody. John Seville from Acorn Wealth Corp, and this is your executive summary for stock setups for Wednesday, the 3rd of February. And what a great day it was. I mean, I said yesterday was going to be a very special recording because we were right on the verge of finding out if we were going to respect that head and shoulders or not. And today we did. Of course, open range was set yesterday with the low of 1920.3. We crashed straight through that today, respecting the head and shoulders as well as the previous support of the expanding range channel that you can see here, and closed well beneath that. So that means open range is negative. Now open range now lasts till the 3rd Friday. So that is open range has been basically close to about 80% statistically correct in predicting where the market's directional bias will be until the next open range day. Now, this is very powerful in February because obviously open range falls on the Monday, and our next open range, which is options expiration, is not until the 19th. So that gives us 1, 2, 3 weeks of negative sentiment in the market as we top out in resistance to the head and shoulders. So this is a beautiful, perfect storm where we could really make some serious money on the puts that we are holding, which is quite a lot. Just a couple of the big ones to before we go into that, let's have a look at the bonds. I mentioned high yield bonds last night as kind of one of the big reasons that I felt that the market was going to fail, along with the fact that only 50% of stocks went up yesterday despite the market rallying. Again, we saw another drop in the high yield bonds, but this time going from 8.87 million yesterday shares traded to 15 million, so basically twice the amount of selling in the corporate high yield bonds, showing a real lack of faith in the stock market. So that's a great sign for the shorts. Couple of obviously key things to mention. Obviously, ILMN is something we've been talking about as a short for a while. I hold puts in this. We were looking at a target down between around this 135 to 140 as an extension of this head and shoulders pattern. It's already down about 8% after market, after missing on earnings, and I believe their profits over 3 months have dropped 32%, I believe is what I read. So this could be a big drop. And if we have a look, obviously, where this stock's come from, it could be a lot further. But I'd certainly look to take some profits there at our target and then maybe reposition. I mean, this has been a strong support level for a while. That doesn't mean that 130 could easily be taken out. So I'd obviously watch that in the morning, but be more than happy to at least clinch some profits there on the drop. Obviously, we also have CBOE reporting tomorrow, which I hold puts in, so that's going to be something to keep an eye out for. And let's have a look. I mean, look, almost all of the shorts that we're covering look great. One of the ones that had a really nice drop today, though, was VNO. If you recall, we mentioned these in the summary a couple of weeks back. For the March $90 puts, which were $1.75. They closed at $5.50 today, so beautiful drop from VNO. That should continue. I mean, all across the board, looking really, really good. Dish, another one, obviously, from our stock report that I talked about in tonight's trading room. Also looks like it's about to set for another drop again as soon as it clears this kind of this support zone right here. We've got a nice descending triangle, so a break then of this low of 46.40 should now continue its drop, and I'd expect it to get down to at least this kind of 38.60 level. So obviously one that we've been very favorable of as well, and of course the puts we talked about there was the June 47.50 puts. And the June 42.50 puts. So one that's actually looking quite good there as well. AIR, another one worth mentioning, also one of our recent selections on the short side, just free falling now. Had a 6.43% drop today. So again, everything looking really good. That's getting very close to its target though of 1933. Not the low was 1934. So that's going to reach its first target almost 100% tomorrow. So in terms of possible new trades, I'm pretty much fully positioned. So I'll only be looking for new trades when and if other positions hit their profit targets. I'll tell you the next one. Of course, the other thing to remember is Netgear, NTGR, also one that had quite a lot of insider selling. That reports tomorrow also. So I believe that's aftermarket, so still opportunity on that. Yeah, so in terms of new shorts, I'm pretty happy with all of the ones we're currently following. There's possibly a lot more downsides to the ones we've obviously already selected, and just letting those really just gain momentum. NXTM though is possibly forming a complex head and shoulders pattern, and looks like it may be rallying up into the resistance zone. So watch for a possible reversal on there. If this head and shoulders were to play out, I'd be looking at a breakdown basically from around this 19, well, where it's at now really, between 1950 and 1970 as a possible entry zone. I'd be looking at a stop loss above the high here of 2022. And in terms of a target, you can see that the head and shoulders extension basically takes us all the way down to where that support was. So I'd be looking there at, let's have a look at the volume. Yeah, so we got a significant volume when we started to break out from that level. So I'd be looking right there at 1567. Of course, this could be something that you could look at options on as well. So just having a quick look at that chain. We've got the June $20 puts trading at $2.30 at the moment. So that's what I'd be looking at there. So now given we're already 60 cents below that, you can take that off the price. So basically what you're paying for the option is about $1.70. Now considering that we've got a head and shoulders pattern and quite a few months for that to possibly play out, that could be an interesting speculative play. Okay, now the other ones that I've got for you are actually hedges. They're longs against the heavy short bias we have, and they're selected based on looking for ones that are really kind of moving against the trend. Now, maybe you don't want to consider any hedges, but I wanted to put them out there regardless. This is HBIO, or Harvard Bioscience. They have some buying coming in from BlackRock. They've also got insider buying as well, and you can see it's moving against the trend. This one I'm looking for a breakout above $3.06. I'd be looking at a stop loss at 283, and my target would be 367. Basically coming up into this area. Now, it could just keep going, so it's something I would be monitoring and updating stop losses, but that's one hedge that I liked. The next hedge, GLPW. Again, it's got some significant volume build up, and I'm just these are hedges to that have independent strength. So these could all fail. But when I'm heavily short, I always like to look at a couple of longs to complement my portfolio where the stocks have their own individual strength. Now with GLPW, I'm looking for a break of $3.03 and a target of 343. And as you can see, just going into the hourly chart, we can see that this is where the breakout really kind of came from, was this push. Now this is an hourly chart, so we're just going to break it down to a 5-minute and see where the real volume started to come in. So the real volume, you can start to see that really kind of kicked in around this price, so around 275. So in terms of a stop criteria, I'd be looking at just underneath that shelf, basically at 268. So you can notice that that's a significant percentage risk. That's a 10% risk on the position, and so you've got to. It's something that we're looking at as a possible longer, really longer term potential, because there is that that possibility that it could just keep running. So I'd be updating the stop loss quickly, and if this really gets some strength, we could see obviously greater levels as it approaches these higher targets. The last one on the hedge list is NMBL, Nimble. These are in the data storage business. They just started to break too. I'd be looking at this as this is optionable. Got a lot more volume in this on the options, and I was looking at the May $7.50 calls, and just having a quick look at the pricing on those again. Yeah, so the May 750 calls currently, those are the puts, 1 second. Yeah, May 750 calls currently priced at 85 cents. So I thought it worth a little bit of a speculative hedge on that, and again, it's got some real potential. I'd basically be looking at a break of two possible entry targets, either a break of 713 or a pullback to 667. So one of the two, either a break of 713 or a pullback to 667. My target on this is 873, and I'd be using 654 as a stop loss. So that basically means from a stock perspective, we've got 1.6, we've got basically either a 3-to-1 or a 6-to-1 risk-reward ratio, depending on where it triggers at. So actually more, sorry, on the if it got down to 667. But what I'm looking at here is the stock is fine. I'm also looking at the calls, and that completes the selections. Now, again, don't feel like you have to take every trade. You don't have to take any trades. These are purely here for educational purposes and to give you some ideas that that you may consider as hedges in your portfolio. Remember, I mean, a lot of the time, what I'll do if I find 3 stocks that I can't just choose between, and let's say I was going to invest $5,000 or $10,000 or $500 in one position, is I just split it amongst the 3, because with all of these we have very specific entry, exits, and stop losses that we've got in mind. So once I've set up those, I don't ever have to look at it again. It doesn't mean that having 10 stocks in my portfolio means extra work. The only work is setting it up in the first place. So obviously one concern is making sure that you have a brokerage account that supports favorable commissions. You can buy and sell $5,000 worth of stock in Interactive Brokers for about $1. So that makes it takes that out of the equation. So always consider that if that's a problem. And that's basically what we're looking at for tonight. ILMN should be a great one tomorrow. We're going to obviously have a very big day of trading, so we'll keep you up to date with alerts. And if you haven't already, if you're receiving this email for the first time as a little freebie, certainly take advantage of our opportunity to trial our service for 1 month for only $9 and get these alerts every night. Just go to acornwealthcorp.com, go to the Contact Us page, and say you'd like to take the trial, and we'll get in touch with you and get you all set up. Okay, so that, again, it's acornwealthcorp.com. Just go to Contact Us, let us know you want to take the trial, and we'll get you set up. Otherwise, to all of our loyal and hopefully very profitable members, wish you a very happy trading, and good night.